Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report from Spectral AI, and let me tell you, it's got more twists and turns than a reality TV show, maybe even more drama than your last family gathering. Get ready because we're about to unpack some deals and debt. This report is called an 8K, and it's basically a company's way of shouting, hey, something important happened. Spectral AI, a company that's working on some interesting medical tech, filed this report in March of 2025. Let's see what all the fuss is about. Okay, first up, it looks like Spectral AI made some deals to sell its stock and warrants. Warrants are like coupons that let you buy stock at a certain price in the future. This is all part of what they're calling an offering, trying to offer their stocks at a certain price. They sold over 2 million shares of their common stock at a price of $1.30 per share. That means they raised a good chunk of money. They also sold warrants privately, meaning they didn't have to go through all the usual public offering hoops. This is often faster, but it means those investors can't just immediately resell those warrants without jumping through some legal hoops. There's a promise in the deal that Spectral AI won't issue more stock or related securities for a while, around 180 days, to avoid flooding the market and dropping the price for those who just bought in. Unless, that is, they can get at least $7 million more in one big chunk. So while they are refraining from making further offerings, if they can get a big bag of money, all promises are off. To help sell these stocks, Spectral AI brought in some placement agents, basically salespeople for stocks. One was SP Angel, handling investors in the UK, and the other was Dominari Securities for the US folks. Dominari even bought some shares and warrants themselves on behalf of investors, so they are really betting on the deal. These agents weren't forced to sell a specific amount. They just had to try their reasonable best to sell everything. In the end, Spectral AI got $27 million before paying fees. They plan to use this money for working capital and general corporate stuff like keeping the lights on and paying the bills. For their work, SP Angel got 7% of the money they helped raise in the UK. Dominari got $50,000 as part of the US deal, so it's not cheap to work with salespeople. Now, buckle up because here comes the debt. Spectral AI secured a loan for potentially $15 million with Avenue Venture Opportunities Fund. They're grabbing $8.5 million up front. This kind of deal is called a debt financing. This is on top of what they are already doing. They have until March of 2028 to pay it back, with a break on interest payments for at least 15 months, maybe even 24 if they hit some milestones. The remaining part of the loan, $6.5 million, depends on a few things. First, the FDA needs to approve their DeepView system. That's the green light they need. Second, they need to raise another $7 million in equity, so more selling of company ownership. The loan also comes with warrants. Avenue gets warrants to buy shares equal to 8.5% of the total loan commitment. The price they pay for those shares will be either an average price over a few days or the lowest price anyone pays for Spectral AI stock between now and the end of next year, whichever is lower. The interest rate on the loan is a bit complicated. It's a variable rate, meaning it can change. It's tied to the prime rate plus an additional percentage or a flat percentage. Whichever is higher at the moment, that is what they will need to pay. This loan creates a direct financial obligation for Spectral AI. They have to pay it back, and the loan is secured by pretty much all of their assets, meaning if they don't pay, the lender can take their stuff. Since the warrants are being sold privately, there are restrictions on reselling them. Investors have to wait until the shares can be sold or use another available rule. The company put out a press release about all this, which is pretty standard. They're telling everyone what's going on. And like always, there's a warning about forward-looking statements. Basically, they're saying, hey, we're making predictions about the future, but things could change. They point you to their other filings for more details on those risks. Now, let's step back and see what this all means. On the one hand, Spectral AI got some much needed cash. The stock and warrant sales brought in some money, and the loan gives them even more runway. That can help them push their DeepView system through regulatory approval and get it out into the market. But on the other hand, they're taking on debt, and they've promised not to issue too much more stock in the near future. They are walking a thin line, but aren't they all? If they are to fail, they might not be able to pay it back and might need to sell their assets. It is a big risk. Also, a lot depends on the FDA approving their DeepView system. If that doesn't happen, they could be in trouble. Overall, Spectral AI is at a critical point. They're betting big on their technology, and they need everything to go right to succeed. It is a high-risk, high-reward situation. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. Until next time.